Thanks very much for joining the Clinton Donnelly Show. So excited to talk about taxes and regulation and how it affects our daily lives. This past week, I was at the CERCA conference and they had a special presentation from the project office staff about the new IRS regulations on broker-dealer regulations or reporting of the 1099s of your crypto trading. They projected that they would receive roughly 8 billion 1099s from this process. This is a massive undertaking. It's going to make taxpayers more vulnerable to audits because the IRS is going to have the perception that you didn't report all your income. Enjoy the show. I was at the CERCA conference, which was sponsored by the IRS for tax preparation software companies and people that interact with them electronically, and had a special presentation from the project office staff about the new IRS regulations on, they're called broker-dealer regulations or reporting of the 1099s of your crypto trading. They just put in a new system they called IRIS, Information Reporting Intake System, and they just put it into place beginning of this year. So they've just rewritten the system. Now they're going to bury it with a volume that's 4 times more than what they were originally projecting. It remains to be seen. There were a lot of concerns at the conference about the availability of this data, and they made an interesting comment. They projected that they would receive roughly 8 billion 1099s from this process. That's in comparison to 2 billion that they received this year. And they expect another 8 billion with the 1099 digital asset. But one takeaway I have that is the IRS has a good grasp that this is going to be a deluge of information for them. You just step back for a second. You think of all the income that gets reported to the IRS. Mainly it comes through W-2s and 1099s. So let's say you move to Kraken, $8,000. You had $8,000 worth of, you took it from fiat and you bought ETH, and then you took that 8,000 and you went over and you bought DAO. You converted it all for DAO, and then you converted it to Link. All right, proceeds of those would be, you have the 8,000 that you went to DAO, 8,000 they went to Link. Let's say you did another transaction, you took that Link and you swapped it for XRP. So now you have an $8,000 XRP. How much assets do you have? $8,000. How much are they going to report on this information? What's it going to look like? It's going to look like a deposit of 8,000 plus trading of 24,000. So that will be reported as $24,000 of proceeds that you received, and that's how the IRS is going to look at it. They don't necessarily know from that data, maybe from the Kraken data, but most people's trading lives are more complicated. They're going to be looking to see that your tax return, that you reported at least $24,000 worth of proceeds. Now they won't know that you had $24,000 worth of cost and had zero gain in that whole scenario. All they're going to know about is the $24,000 of proceeds. Then they're going to look at your tax return and they go, like, this guy reported at least $24,000 in proceeds from capital gains activities. And if he didn't report anything, or he just reported $8,000, well, it has a high likelihood of triggering an audit, at least getting you set up to be a person of interest for auditing. They're looking at about 2 billion of the current volume of 1099. And now they're looking for another 8 billion. I mean, that is 4 times more income reporting than all the other income reporting for individuals combined. This is a massive undertaking that they're engaged in. I believe the IRS understands that there's going to be duplicate reporting from these regulations, because not only if you transfer from a wallet to someplace and then you sell it on Coinbase, you're going to get some duplicate transaction reporting. I think they understand this. I believe they look at that as a data challenge, that they'll have to use sophisticated approaches to analyze the data and the source of the data to determine when they think real underreporting has occurred or not. So it's going to be a massive challenge for the IRS, just handling staggering amounts of data. It's going to make it more complicated first of all, because on top of your regular calculating your crypto gains, assuming you're a person who uses multiple exchanges and multiple wallets, that's complicated to calculate that gain. But on top of that, you're going to get these 1099s that are going to be reporting possibly very outrageous amounts of proceeds, which would give the appearance that you made maybe more income than you already did. So it's going to add an extra step of adjusting and making corrections to those forms to reflect something that's more accurate. So I think it's going to be I think it's going to make taxpayers more vulnerable to audits because the IRS is going to have the perception that you didn't report all your income. And I think it's going to be a very real issue. So they're basically gathering the unreported 1099 information for all prior years going back to 2016, which is interesting that the IRS is still going after 2016, 2017. So, if you have unreported taxes there, it's still an area where the IRS feels it can go after. Well, if you thought tax compliance was tough in the past, you haven't seen the future. And it's going to get worse. And the question for that 75% who have not been reporting or underreporting is, how do I get into compliance? And it starts by making a conscious decision that you're going to have to live in a compliant world. It's too tough to not be compliant for a long-term basis. So I would make a firm decision, a New Year's resolution, if you will, that when you file your taxes in 2024, that you honestly report all your crypto income. If you have a significant past gain calculation you haven't reported, maybe recalculate it all right now, at least know exactly what it is. If you can't do it yourself, you should hire a full service firm like ours to do that gain calculation and just do all of it. Even if you don't report the prior years at this time, but at least you know what you owe, and then you can start to move towards increased compliance and filing and amending tax returns, as you have the finances to do that. I should mention that you're required by law to report on your original tax return all your income, and if you get audited and it hasn't been corrected, then you're subject to penalties and possible fines. Thanks so much for watching our show. Please hit the subscribe, like, and follow button as appropriate, and let others know about this show. I hope it means a lot to you. Hope this has been useful content, and hope you have a great day. Please give us comments. We would love to respond to any questions you give us. You have tax questions that we can apply to. We will try to address it in future shows. Please hit like, subscribe, follow. Thank you. Have a great day.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn, or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive Audit Defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like Audit Defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.